We're now going to talk about paragraph 64, capital B1. Now, guys, from the start, I'll say that this is something that's not commonly tested. It's actually a bit of a strange situation that it is even included in this manner, because paragraph 64B has a number of subparagraphs, but they're only testing paragraph 64B1. This is a very specific situation, not very common. This is disposal of equity shares in foreign companies. So the idea here is that if you had foreign shares and you dispose of it, so you'll say proceeds less base cost, right? Any capital gain or capital loss will be disregarded if this applies. So in any case, in your CDT column, basically, you won't put anything. What is it? It says, subject to subparagraph 4, which is not examinable, a person other than a headquarter company, all headquarter companies are not examinable, so a person must disregard a capital gain or capital loss, so gain or loss, determined in respect of the disposal of an equity share in a foreign company, if that person, so the person who sold it, whether alone or together with another person in the same group of companies, held an interest of at least 10% of the equity shares, and they held it for at least 18 months. But this does not apply unless, so this does not apply if that person is a company, if it was purchased by a person from any other company that formed part of the same group of companies, and that person in that other company in aggregate held that interest for more than 18 months. Right, and that interest is disposal to any other person that is not a resident. That's important here. For an amount that equals or exceeds the market value. So you have to sell it for its market value or more to a non-resident. So if you have a capital gain or loss and you sold it, you had it for at least 18 months, there will be no capital gain or loss. Okay, so be aware of it, guys, but not as common.